Greetings, YouTube friends. Last time, Juan and I explored how astrology can be used to forecast financial markets, especially through planetary timing, Bitcoin, and the broader market cycles. Today, we're continuing this conversation as Juan shares more about his new forecasting model that he's been developing, what it's showing, and how the current market setup compares to the signals that we discussed in our last episode. Welcome, Juan.
Hey, Mario, good to see you, my friend. I'm glad to be here.
Yeah, I'm so excited to jump back into this and, explore the development of your new timing model.
Well, if you want, I can share the screen right away, but I have to thank you for your amazing feedback because it was invaluable. It was simple, but it was powerful. You just said, show the price. And yeah, that changed it for me. It made it come alive. So let me share the screen. I changed the name of it. I call it market cycle science now because I was showing it for my company and they're not fans of this. So I said, it's just science. It's just math. Which is you and I were talking about offline. It's like, yeah, these algorithms are based on math. This is just the stock market. And you can see here, one thing that this was your feedback price.
Mm-hmm.
And so guys, the plan is eventually going to be able to test this out before I launch the product. But for now, it's going to be internal testing. It's going to be Margo. It's going to be people that I know are going to provide super valuable feedback because you're going to be able to make sense of this tool. But eventually, it's going to be like an open beta. But please, feedback. Once it's public and you can check it out, send feedback. The stock market is not, I mean, let's get into that one a little later. What I'm watching now is you asked me about oil. Let's go to oil. Let's see, what do we got here? So I changed this view. I don't know if I had this view when I talked to you, the composite or individual view. This may be too complicated. There are so many ways to forecast um, a financial asset. One of them is using the natal charts, and you and I were talking about that when we had our first discussion. I had just launched that, and it's amazing because in some markets, using the natal chart is produces the best models.
Mm-hmm.
Now, I don't know about oil. I've been doing it with companies. With individual companies, usually when I run my models, the one that relies on natal chart is the best, always the best. And it's funny how it came to that because I thought, what if I start every cycle on a certain date when the company begins, for instance, or an important turning point? And then I realized, oh, that's what we do when we do a natal chart, which is reset every cycle to zero when we're born. Because when we're saying, oh, my natal Jupiter is opposed to to transiting Jupiter, right? That means it traveled 180 degrees plus whatever it did. So on net, it traveled 180 degrees since I was born. I'm resetting the cycle on the moment that I was born. And you can do that with companies, you can do that with anything. And you don't necessarily have to pick a birth date. You can pick something that was important for that
Mm-hmm.
person, for that company, for that commodity, which is so logical, right? But I never understood it that way. Just know that it's a technique that astrologers use, but I didn't. I was like, I just accepted it. Like, oh, okay, we do this. But now it makes sense. So this is oil, and it's funny because there is a lot of noise in oil. Can you see my screen?
Yeah, I can see your screen. Yeah, oil is, in my opinion, one of the most manipulated markets in the world.
Yeah,
So,
no, for sure. It is 100% because,
yeah.
for instance, when you look at pure cycles, let me zoom in even more. So this is what is this? A 5-year cycle? I think it's a 5-year cycle. I'm bad at doing math live, so I'm just gonna pull up my calculator. I don't know why that happens. It's a 4-year cycle. So there's a four-year cycle to oil, and according to the planets, the last high on that cycle is June of 2024. But the actual high price within that 4-year cycle period took place in September 2023. So before I could see the raw price overlaid on top of the forecast, which is the model, the orange line, I thought this was just wrong. It was like, oh, this is wrong. It's just off. I can't use this model. But when I overlay on top of price, it's like, wait a minute, it's not wrong. It's just manipulated. So it will go for these dramatic rallies So
Mm-hmm.
notice that this rally between June 2023 and September 23, that's more than the entire 4-year cycle. It moved more in those few months than the entire 4-year cycle, which is not the way it should be. There's actually I have on my YouTube channel, I have a lesson on Hurst cycles, and
Mm-hmm.
one of his 7 or 8, I don't know how many principles, I think it was 7 principles. One of the 7 principles is the principle of proportionality, which means the longer the cycle, the more the market will move within that cycle. That doesn't apply to oil, which leads me to believe that's a very winded way of saying, yeah, that's price manipulation, because that's how it should behave. The longer the cycle, the more it should move. With astrology, it's the same thing. Events that happen within the lunar cycle or Mercury cycle, they're nowhere near as impactful or eventful as stuff that happens when, I don't know, Neptune and Saturn come together. Those are much more impactful. That is proportionality. That is the
Yeah.
principle of proportionality. What are you to make of something where it doesn't apply? Like proportionality just doesn't, is not really true. And that's the case with oil. And notice this surge here, this is post-war, and this doesn't get live feeds, live price feeds yet. I haven't connected it to any APIs. So
Mm.
this is runs, it shows you what I was looking at when I ran this model. So it was mid-March. And notice that right off the bat, it's the 4-year cycle top is due sometime this year, I would say. It says April 2026, but oil has continued to go up. We can go down into shorter cycles. I think the high is going to be more like in July, maybe.
Mm.
But since it is very manipulated, it could be very, very off. It's just, like for instance, the low is supposed to be May of 2025 on the last 4-year cycle. We do have we have the low in oil. The forecast is for May. Sorry, we have the low in May. Forecast is for May. It actually made a new low in December of 2025. That shouldn't have happened. Although to be honest, it was a sideways. So this is thanks to you. Like now, I feel like once you can look at price and look at the model, you can make more sense out of it. Because the thing that doesn't happen is prices will not be deviating dramatically from the planetary model. They'll still follow, the price will still follow the model. It will still follow the planet stuff. But it's just be aware that when you're trading something like oil, there's gonna be a lot of noise. Uh, Bitcoin is the opposite of that. Like it just follows the planets. It just does whatever the planets say. Proportionality is super exact with Bitcoin. Chinese stock market too. And Margo, when we met, we were at a conference. I don't know if you saw the stock. There was a lady, a British lady. She was talking about the Chinese stock market, and she was showing something about eclipses or something. And she was very assertive. She said, "This always happens with the Chinese stock market." And so when I ran my forecast on it, yeah, it's like, yeah, it's very predictable. It follows the planets. Uh, my take, and this is a long intro monologue. I'll shut up now. But
Oh,
my guess is there's a lot less manipulation in the Chinese stock market and the U.S. stock market because in the United States it's a financialized economy, and if the stock market doesn't go up forever, tax tax receipts collapse, government goes into debt crisis and whatever. So there's an incentive by politicians to pump the stock market, whereas I think the Chinese stocks only represent like 20% of Chinese household savings. So it doesn't matter. The stock market doesn't matter in China, whereas it's a key political KPI, I guess you can call it, in the United States, which translates into this thing that just goes up. It goes up forever, and I guess it will continue to be that way. So it's great. You just trade it on the long side. Anyways, I'll shut up now.
no, this is great. So, this is the 4-year cycle here. I wonder if something I've noticed, and I wonder if you've noticed this, is that sometimes cycles alternate. So, I think a good place that I noticed it was I did research on the Dow Jones all the way back to the 1900, and I was looking for that consistent cycle. And in traditional time cycle work, you're practicing her cycles, which is mostly what I use. Then there's cycles in the way Ray Merriman uses them, where he's looking for a 1/6 of the duration of the cycle as the orb, and then so like an 18-year cycle could be 13 years or it could be 21 years, right?
Yeah, yeah, yeah,
I
yeah.
decided I decided to try to change the way I was viewing it. For example, Well, an 18-year cycle can be 13 years or 21 years or 15 years or 17 years. But what I started to notice is if I looked for cyclical patterns, particularly correlated to um, Fibonacci sequences, that
Uh-huh.
that it alternates around. And like, for example, you get, like 13 is a Fibonacci number. So you would get a 13-year cycle, and then you would come back in and you would get a 21-year cycle. And I noticed that there was patterns inside of that. I guess I'm wondering if you've noticed any such a thing inside of the shorter term frame time cycles, or if you've even ever looked at something like that. So it's like a pattern within the cycles instead of just a repeating pattern of a standard cycle that varies in orb, looking for
Mhm.
the pattern within the pattern. Makes sense.
Yeah, so what you're trying to do is forecast the variation of the cycle.
Correct. Yeah.
I have looked into that. I haven't actually, I have. So, for instance, what you're looking at here is a forecast for a 1440-day cycle. That's about 4 years. And yet there's so much variation within that cycle that lately it's been 2 years. Notice that the
Mhm.
forecast that is based on that. So it's trained on this. Where's the model? Oh, I don't have the model here. So it's trained on a cycle that will average out to 4 years. And yet what it comes back with is, hey, that 4 year cycle, it's only going to last 2 years. And this is what
Mhm.
it said. This is what the planet said. So I train it on a 4 year wave, and sometimes it will forecast a completely different duration. I don't know if that answers your question, but there's a lot. The key difference between Ray Merriman's way of doing cycles and mine is that I allow for a lot of variation. I just don't care how much it can vary. I train it on a specific frequency, and it can vary a lot, up to 50%. So 4 years, it can be anywhere between 2 and 6, not 16%. It's a lot more. Now, up until before I started using planets, it was very difficult for me to get a sense of how that variation will shake out. Because if I'm saying, hey, it's anywhere between 2 and 6 years, that is a lot. That is a big difference. So I was actually struggling with this issue of variation within a cycle. Then I discovered this, and it turns out this method of calculating planetary cycles allows for a lot of variation. Uh, a lot. It can vary. Sometimes it will show a 4 year cycle to be completed within a year, and that's fine. Why? Because, well, I guess because the planets are causing that, or just happen to be moving in a certain way, and it just so happens that the wave is going to be a lot shorter. But yeah,
Well,
I've noticed a lot of variation, but the pattern I think comes from probably the underlying concept, which is this planetary motion that is not always like, how Pluto can vary. I don't know how much. Like it can be 20 years in a sign, or 10.
yeah.
So so
Yeah,
yeah.
absolutely. I mean, the planets, depending on where they're at, are moving. Their speed is changing. They're either moving faster or slower, and so I definitely think that has something to do with it. Um, I also think, and something I learned from you actually was that the cycles aren't always going to be present in every asset, right? You
No,
like
yeah.
what I find is a lot of times in an asset that runs a 57-day Hurst cycle, it might not run a standard 20-week cycle, really. And you could put two 57-day cycles and put it together, and that will run like a 120-day cycle or something like that,
Yeah.
But I don't necessarily find that every cycle works on every asset, you know. Um,
That's true. They're usually dominant cycles. And one of the things that I addressed in this new model that I'm building is that I don't actually start with her cycles. I start with something called spectral analysis. So I take the price, I detrend it, and then I look for dominant frequencies. You'd be shocked at how often these land on Hearst's frequencies. Sometimes they don't. For instance, this is the stock market, 480 days. This is very common in TradFi. I find this 480-day cycle very often. It's about 18 months. Uh, Hearst's closest cycle is 640. He does not have a 480-day cycle yet. I think I found that in the Chinese stock market. I found that in the US stock market. And to your point about cycles not always showing up, this is a good example. You're looking at this 18-month wave in the stock market, and notice that so the prediction, the model sort of forecasts like in 2022 we get this low in October. Okay, we got that. Then it forecasts a top on the 18-month wave. There is no top. It just keeps going, and
mhm.
then it makes a low here. So I guess it was inverted here because it signaled the stop. Then it made a low, and then it just kept going. So that means the cycle is not showing up. And actually on YouTube, I have the video on the stock market touches on this, and this is before I even had this model, but I already knew this to be true. The cycles don't always show up. Now, the most glaring example of this is the stock market. The stock market is a very weird one. I guess from a trading perspective, it's easy to trade because the cycles. What does it mean that an 18-month cycle correction is not showing up? It means the market just kept going higher. That's what it meant.
Yeah.
So it means as an investor, you don't have to worry about it. Now, the cycle is still there. If I switch to individual view, the cycle is actually still there, even though the correction doesn't show up. So let me show you an example of that. I can't find a good. Oh, here's a good example. So this is 2012 through 2015. And notice that this blue line is going down and staying flat. And then the planets are predicting the stop. But look what prices are doing. They just keep going. So when I don't want to get too complicated, but when you isolate the frequencies, you can definitely see, oh, the market is undergoing this 18-month cycle correction. I just can't see it in price, which again, if you're trading, then if you don't see it, what's the point? Well, the point is you're able to forecast it with this method, and some of them do show up, like this one in 2016, I think it was, October 2015, it showed up as a correction, but it ended ahead of schedule. And the low, we do have a low here, 2016. That's when the cycle should have ended, but no, it actually ended a lot sooner than that. This happens a lot with the stock market, which is why, yeah, I don't, it's just, it happens. Some cycles are not important. Some cycles don't really show up. They will show up when it matters. Like if I hide this, it predicts 2008. So you need, with the stock market, the way I reconcile this is you have to use some technical analysis to see if the cycle is actually going to show up. Because a lot of these are just going to be sideways corrections. We were discussing the 2018 one. It's like one of my favorite ones because it's such a, because it ends when it says it should. It sort of starts when it says it should. That reminds me of today actually, because it said, this model said, okay, the stock market is topping out. The market went parabolic for a few more months. So the model is saying, hey, October 2017, that's the top. The market went parabolic on October 2017, for a few months, going into January of 2018, but then it crashed. So it's not like it will not follow the planetary influence. It will. But with a caveat, you need technical analysis with the stock market. You need the setup. Whereas with things like Bitcoin or maybe the treasury market that are more cyclical, if you see the turning point and some indication that it's the market is actually turning, you can take the trade. With the stock market, it's would you short this? No. If you short it here in October of 2017, you get destroyed. The market goes parabolic. You probably stopped out at this point. You're not still in the trade. If you hang on long enough, you get your crash late in the cycle, as the cycle is about to turn in December of 2018. And sure, you get paid, but you have to wait a year. You take a ton of pain, and it's just not worth it. And it's just sideways. It was this sideways correction, and COVID is the same thing. September 2019, warning: the 18-month cycle is topping out. Nothing happens. Market goes parabolic. COVID hits, crash, historic crash, and then the market just goes again. So, and if I bring up the 4.5 year cycle, yeah, hang on.
Oh yeah.
No, go on.
Oh, well, I was just going to say another addition to how I reconcile those cycles is the lower time frame cycles too, right? Because you can.
Oh, absolutely. Yeah. If you look at the lower time frames, you can see other cycles doing other things. 100%. That's how you can like get granular and nail the exact date when something might happen. Just like we do in astrology. I mean, you take the big cycle and then you go, well, now the moon is activating this conjunction, or now it's Mars. When Mars passed through the same point where the eclipse took place on the 7th, and boom, that's the trigger. So no, absolutely, you can I actually do that with the stuff that I trade. I go, what's the 4.5 year cycle saying? What is the 18-month cycle saying? The 240-day cycle, and then I stop with the 120-day cycle in the stock market. That's where I stop. So I'll go, okay, so what's it saying? So for instance, even though when the Iran war broke out, I was looking at the correction that was taking place, because notice 4.5 year cycle it's due again, and it's looking like a sideways type correction, because the ideal time frame for the top is December 2024 through May 2025. We get the correction. We already had a second correction. So we're entering this choppy, volatile period according to this cycle. But clearly from price action, we can see we're not getting a bear market. We're not going to get a crash. We're not going to get a bear market. We're going to get chop and volatility. And that's what this model is saying. Because if you look at every one of these 4.5 year cycle corrections, some of them are 2008. Most of them are just sideways, choppy, volatile. It's just not ideal to hold on. Like you shouldn't be buying now. We're recording this on like May 14th. You shouldn't be buying the S&P now because you're probably gonna get at some point. I'd be curious to hear your thoughts, but at some point we're gonna get a correction. Now, when do I think the correction happens? You go into the shorter term cycles, and now I'm thinking this May 30th date, around that time, that's when the market will make its correction. Now, because we're in the down phase of a 4.5 year cycle, every one of these 120-day cycle corrections could prove extremely volatile. And I think that's the risk we're in now. Like every one of these corrections could prove extremely volatile based on past history on how these cycles play with one another in the past. So we're in this corrective period for the 4.5 year wave. That brings in a lot of volatility every time the shorter term stuff turns lower. And it sort of nailed the bottom. When you and I spoke, I had a different best model for this. It had April's 3 for the bottom. This one shows March 16th. So it's a little more off, but it is a better model overall. And still, 2 weeks. This is a 4 month cycle. That's pretty good.
Yeah, you're with that. I think that low that manifested at the end of March, that was with precision because that also aligned just within 10 days of the equinox too, which is just a classic turning point in the equity market. So
yeah,
between I think, for me, when I'm looking at, I look at all of the sum totality of when you layer the Hearst cycles with the planetary models or planetary cycles with technical analysis, that is an incredible edge. Like I can really hone in. And if you can get a bottom within a week or two of the bottom, I mean, great. You can dollar cost average into it, or you can even wait for the reversal if you're more conservative, right? But
100%.
yeah, I mean, that's the key. Timing is such an added extra edge,
Yeah, absolutely. And I like what you said about Hearst cycles with the, I mean, I don't think Hearst ever used the planets. I don't know of anybody who knew of him, like knew him personally. I think somebody who went to one of his events, but like people who knew him, I don't know that he was using planets, but I find this combination between using Hearst's own described methods to isolate cycles and then trying to fit them using planetary data. That's just incredible. I mean, it's just gold. It's super powerful. But again, and to your point, you have to have some sense of timing or technical analysis because if you look at this wave, this 120-day cycle wave, yeah, it is forecasting the highs and lows. You can see it here. Like it's pretty good. It's pretty accurate. It's not the most accurate, but 60% correlation for a short-term cycle is very powerful. So we agreed last time we spoke, there's a low coming. The low came. It's rallying now. I don't know if May, June will be the top, but that's what it's saying. I'm looking forward to that. But whereas if the market was not making new highs, if the high had been back in February, I don't think what this was, I think it was in February. So the high had been in February, like this is the case with the Dow Jones. Then when this cycle turns down, you might want to take that trade. But now that the stock market is basically at all-time highs and it's super strong, you don't want to take that trade. Maybe if this correction between May and let's see, July, I think. Yeah, May, July. This May, July correction materializes, you may want to buy that around late July. That's a buying opportunity. So be aware of how the technical, like what is the technical picture. But honestly, using cycle, I feel like using cycle analysis, you may disagree, you probably will disagree with this, but I feel like it is harder with the stock market because you're like, oh, look, 4.5 year cycle correction. It's taking place. Look, the market is gonna go down, and it doesn't. It just goes parabolic. And yeah, this is the only asset where I'm seeing this. With the other asset classes, it just follows the cycle. The cycle turns down, the market turns down. Cycle turns up, the market turns up. I've never seen other assets with like we have sideways corrections or cycles that don't show up at all, but then they show up right on schedule, right where they're supposed to be. It's super weird.
Yeah, I mean, I don't necessarily disagree with you. I use the 54-month cycle, but I use my variation technique that I was talking about. So, and one of the
Oh,
patterns that I notice that consistently shows up in the US equity markets is that sometimes we get like a 30 or 33 week cycle, and sometimes we get a 54, sorry, not 30 or 33
month.
month cycle, and sometimes we get a 54-month cycle. And so, and then that oftentimes alternates. And I've even found that the ratio of the cycles can oftentimes equate out to either Fibonacci ratios or pi or various different sacred mathematics numbers. And that's kind of harkens back to what we were talking about before we started this: is math is the language of the universe. And so it's just, there's a quote, I think, is it a Bible quote somewhere, the like it's basically like for those with eyes to see, you can see it, and I think that's so. I guess I try not to fit it 100% into the rules of Hearst in that way, although I think he has a really excellent system. And one of his, like, the tools that I learned from you that is part of your system is using his VTLs. And I
Oh
think
yeah, those are incredible. And with the stock market, they never fail. Like maybe
you
I'm supposed to say they will fail sometimes, but yeah, they rarely fail.
rarely. And when you add that layer with your technical analysis, you put the VTL on there. It's just such a good setup. I remember you built an algorithm, didn't you, for trading Bitcoin? And do you use that?
Absolutely. No, absolutely. It's one of the edges of the system. So it uses like normal momentum style indicators, but
Yeah.
it's using VTLs to get it to gauge what the long-term trend is, like medium to long-term trend is. That's where all the edge is. That's where all the magic is because the traits are filtered out based on, yeah, what those cycles are doing, strictly based on VTLs, which is price action based. So I don't use forecasts at all in my trading algorithms. It's just VTLs mostly. This is
Yeah.
VTLs and breakouts. That's all
For
it is.
for anybody who doesn't know what a VTL is, it's a valid trend line. It's a Hearst technique. Do you have one that you could show real quick by chance? I have.
Absolutely.
Yeah.
Yeah. I mean, you can share them if you want,
Oh,
just to
it's
show
okay.
people how easy it is.
Oh yeah, here,
Oh,
sure.
it's gonna be part of the tool, by the way. There's gonna be another view. We're gonna be able to click on the ticker symbol. You're gonna be able to see Hearst's view of the market with VTLs, where the waves are, the fitted cycles. You're gonna be able to see all of that. So that's coming. That's easy. I have all of that. It will take me an afternoon to code that into the system. But there you go. That's a beautiful one.
That's just a 54-month VTL, right? And so, but this is really important in the oil market, in my opinion, right?
Interesting.
Because look
Interesting.
where it's running, right? We just broke through it. We've dipped below it. We're back testing it. This is a pretty key level right here, right? And
Yeah.
circling back to oil, one of the things that I found, I started because when I was thinking about the fact that oil is heavily manipulated, and my initial take was, wow, we just had a bull break out of this multi-year tightening range. This thing should keep going by technical rules, right? Kind of like you were saying
Yeah.
that oil doesn't abide by time cycle rules. Well, oil doesn't abide by technical analysis rules either.
Yeah, no, it doesn't. You
Because
can't read too much into it.
no, because I looked it up. I had my AI run a complete analysis, a price analysis on all breakouts since 1990, and they only last between. Sorry, let me clarify. We looked at breakouts that took place after 1 year or more of a tightening range. So using the parameters for a squeeze, and a squeeze was created by John Carter, and it's a tightening range. It's a compression zone, right,
Yeah.
on the daily or weekly or monthly chart. And so those breakouts lasted anywhere between 2 and 10 months afterwards, with an average around 6. But the point being that the squeeze rule is that you would look for follow through for 6 to 8 bars on any time frame that you're squeezing on. And so this, the oil chart was squeezing. I'm pretty sure it was squeezing on the 3 month time frame actually. And I was like, that's a really long time. If we
Yeah.
Yeah, that was squeezing on the 3 month chart. So I'm like, so does that mean that we're gonna see, you know, 6 to 8 3 month bars of upside move in oil. And I was like, no,
No,
I don't think
I don't
that's
think
even
so.
possible. But it's just
Oh,
not how it works. So anyway, that's my 2 cents on oil. And back to the VTL. So the way you use the VTL is that once you cross it to the upside, that signals a bullish cycle, right? So that signals that we've got a bullish 54-month cycle going on here, correct?
yeah, that's
Then,
basically what it means. Yeah. If
yep,
it crosses the high VTO, if you connect the lows, it
yep,
means the opposite.
correct. Yeah. And that's the highs. So what would your take be on that? Like, because I'm using this kind of like a key level. Obviously, we need to hold 78.97 because that's our low of consolidation from a technical standpoint. But
Yeah.
I was viewing this as like we need oil to stay above 91, basically, if we're going to see continuation here. Does that seem
So what I would say first is I hope oil goes down because it seems to be hurting the global economy and even flight tickets. And I'm privileged to say I only have to pay higher flight tickets or whatever. But yeah, it hurts the world, which is
yeah.
why I think you cannot apply those rules because you're gonna have governments, you're gonna have deals made, you're gonna have the UAE dropping out of OPEC trying to increase supply. And so there's so much manipulation within the oil market that I don't normally apply classic technical analysis rules. Like I throw them out the window. I
Mm,
will say though, cycles still work. VTLs, like you show, they still work. Um, the Astro models, they still work. Like I'm surprised to see that if you mentally strip out weird spikes and you just take the trend of the move, it's like, oh, so it is actually following the planets somewhat. It's just that when the cycle turns up, and I just showed you, I can show you again if you want. The cycle turned higher somewhere in December of 2025. So in December 2025, the 4-year oil cycle turns higher. Um, so that means prices should go up. Now, that can mean it goes from 65 to 90, or war breaks out and it goes to 120 and it goes to 150. Like it's so volatile and it's so dependent on, like when people say, well, I use technical analysis to predict that surge in oil prices. No, you did not, because the same setup rarely produces that. That's the war. That's because of the war that dramatically expanded volatility. Now, maybe you can use other tools. For instance, Saturn Neptune conjunction, that happens once every 36 years. I think that some stuff was pointing to Iran or this because I don't know what planet is on like the map. I think it's like Uranus is over there, and so you could have done used other tools, not looking at price action, just using other tools to say, hey, I think something bad happens in the Middle East, and look, the oil cycle is turning higher, so maybe we get a dramatic surge. And I actually know people who just looking at the geopolitical situation, were positioned for this, and they made a lot of
mm,
money on that trade. So I'm
mhm,
not saying it cannot be predicted, but you need to be aware of things that are happening, like political stuff around the market that will also affect it. And I will also say I'm not a gold oil specialist. Like I do not trade it for this reason because I tend to be very focused on technicals, cycles, price action, and I just found that I'm reliable. Even though I have a lesson, it's not on YouTube yet. Actually, I haven't put it there. But like I teach like a simple. Like, I have a lesson on how to trade oil, how to what the cycles are on oil, and I wanted to end those lessons with like a trading strategy. So I came up with a trading strategy. It's not the best, and it trades around the 18-month cycle, which it kind of works when those breakouts on the 18-month wave take place. Yeah, those are some of them are actually good trades. Of course, we had to set up in January for
mm.
this technique this trading method that I teach, but that's an outlier. I'm not gonna say, oh, it always does. It never does that. Sometimes it does. Like, of course, we using that method, you could have shorted when it went to zero because that setup actually did show up twice before it went to zero. Uh, that means isn't that crazy? It went to zero. It was at zero 6 years ago. Oil was
Oh,
at zero.
I
This is
know.
crazy.
I mean, well, and you know what I like about that, just from a cycle standpoint, though, that was the reset for oil. That is the longer term cycle low on oil. And
Yeah, I'm using that.
yeah, I
I'm
mean,
using
how
that
would it
as a
not be?
NATO.
Yeah,
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 yeah.
that was a pretty important cycle point. But at any rate, yeah, I guess that's just, that's something to note. And so, how much more juice does this have in it? I'm not sure. I definitely am looking for one more pop in this over the summer.
Me too. Yeah, me too.
And that, so it's interesting that you had I think you had the 20-week cycle low coming in July. I have a couple different variations on how I was running those cycles, but I like
Okay.
the potential of the April 13th as a low because you
Oh, I
double
have,
bottom.
yeah, I have that too.
Okay.
Let's go through yours and then we'll look at
Well,
mine
yeah,
because I
I
think
have
we're
that.
aligned here.
Yeah. So then if I push this out, then it's August 31st is where I get that low. And, we've got two analog variations. My analogs are based on the Venus cycle. And so, both of them, though, we could get a 20-week cycle low here in early August. So it's looking like a peak if this continues to track. And I throw that caveat out because I've been talking a lot about this in many of my videos and in my Discord, is that we have Uranus at the bending of the nodes on the 12th of June and the sun square the nodes. And so I find eclipses and the midpoint between eclipses, which is sun square the nodes, to be the 2 points in the year when it's most likely to have other planetary cycles disrupted. It's almost, it's better than a 70% chance that it's going to disrupt other cycles.
Oh, that's very useful. So
Yeah,
the bending of the nodes is the squaring the nodes, is
it
it?
is. It's any planet that squares the nodes. And when the sun is square the nodes this time, I didn't prep a chart, otherwise I would show you. But when the sun is square the nodes, it's going to have Uranus within 3 degrees of the sun at that.
Oh,
And
okay.
Carl Payne Toby did a bunch of research on this, and there's a woman. Her book is called. Hold on, I've got it right here. Moon Wobbles. I don't have it right there actually, but
Yeah, I
her
like that
name is
name.
Naomi
Moon
or
wobbles.
Naomi. I think it's Naomi Campbell, but I could be wrong on that. But anyway, she reproduced and expanded on a lot of Carl Payne Toby's research and found there's evidence-based research that connects Uranus at the bending of the nodes to natural disasters, to unexpected conflict or war, and to crises in the financial markets. And
Oh,
I even then did my own research on it. I produced a spreadsheet using my AI, went back and looked at every Uranus at the bending of the nodes event since 1900. And there's 100% correlation with natural disasters, with conflict escalation, with not 100% correlation with financial market disruption, but a high correlation with financial market disruption.
and can I ask you something?
Yeah.
So that happens, but that's not a very so 100%. But within what's the orb? Is it
June,
that
June,
year or
yeah, June 12th. Hold on, let me grab. So it's
plus
30 days.
minus?
30
Because
days
I'm
plus or
going to Italy in late June, and you're making me nervous.
Well, it's plus or minus 30 days. I'm traveling to New York on the 27th of May. Actually, I'm going to the Foundation for Cycle Studies gathering. And so I actually did. I thought twice about it before I committed because I didn't know if I wanted to fly during that time. But I'm going. I'm just going to believe that everything will be okay.
I'm gonna believe. I'm gonna go. There's a presentation just completely unrelated, or maybe not so much. This guy who's claiming to use satellite and Doppler tomography to pierce the ground.
Oh, wow.
And he's saying he's said to have found all of these ancient things like under the pyramids, and now he's claiming he found the second Sphinx.
What?
I was
That's
very
cool.
yeah, interesting guy. He's doing a talk. He's an Italian researcher, and he's doing a talk in Bologna on 21st of June. I was like, hey, I'm going to that.
Oh,
I'm just going to that. Like, I need to see this.
that's
All right,
cool.
so that it is. Is
This is
that
my
it?
this is my spreadsheet, and I'm happy to share it with you when we're done. But
We'll
something
love to.
to take note of is when did we have a Uranus Square the Nodes event? We had one in 2018. 2018 is the 8-year Venus cycle, and that is what I've been talking about. And so the event took place about 30 days before the Christmas crash. So,
Yeah, I remember that.
yeah, it's just noteworthy. It doesn't necessarily align exactly with a crisis in the stock market, but it definitely has a correlation to events. Black Monday happened 2 months before a Uranus square the nodes, so it puts us in a volatility window. Um,
I'm showing that too, by the way. I don't know if I did a good job of explaining that, but late late May looks tricky in
Yeah.
pretty
Yeah.
much every asset that I'm looking at. Oil looks bullish. My guess is, but I've been wrong so far. This Iran thing, this Strait of Hormuz thing is not gonna does it, the fact that it shows my model is showing like 16th of May, 17th of May for a big low in oil. Um,
Oh,
but it's showing up as a top in Bitcoin and it's showing up as a top is in the stock market. So I'm thinking that's related.
that's interesting. So all of my analogs are at risk during Sun Square the nodes. And by at risk, I mean they're at risk of inversion or deviation.
Uh,
Like I said, it happens 70% of the time that my cycle forecasts invert or just disrupt and then either go back to the way they were within a week or so of the event, or they completely invert during the event and then just stay inverted for the rest of the cycle. And
yeah,
so that's something I'm watching. So crude oil for me, I was looking more for us to peak out and come down into June. Really, my primary forecast has been looking for a buying opportunity in crude oil in June. Um,
oh, okay.
that's been my primary forecast. But of course, with the Sun Square the Nodes and the Uranus Square the Nodes event, this is where I just really lean into price action, actually. So same here. I've got a dip showing pivot high due this week um, on the Dow Jones, and it's plus or minus 1 week. All my weekly pivots get plus or minus 1 week, and you can see these are all prior weekly pivots. They're pretty solid. Um,
Right. So, but I think we agree because you're looking at a top in the stock market,
yeah,
right?
with a dip that then is a buyable dip, because I think then we rally
Yeah,
back
of
up.
course. Yeah,
Yeah,
of course. That's just technical. I mean, yeah, any
yeah.
dip now. Yeah. If it's volatile, if you get lucky, it goes back to the February top, the
Yeah.
previous all-time high, and
I
then
mean,
you
this
buy
is
that.
using the Dow, and the Dow has been the laggard of the batch. I mean, the Nasdaq has been just like on
On a
fire.
tear.
Yeah, yeah,
It's incredible.
yeah,
That is historic. It's
yeah,
historic. Rarely sustainable, Al. It's
yeah.
rarely sustainable.
Agreed.
Um,
Agreed.
so, but no, actually, I think let me show you what I'm seeing for oil because what I'm seeing is basically what's been happening, like a pause within a cycle that started earlier in the year.
Yeah.
And the pause is about to end. So if you're looking at buying opportunities, I'm looking at that. Except I'm not gonna buy it because yeah, I don't like to trade oil. I got burned so many times. It was like, you know what? I'm never trading this again, and I'm sticking with that. So notice that. So you have this thing turning
Mm-hmm.
on January 22nd, and again, it can be a little off. It's fine. This
Mm-hmm.
is uh, this is like an 8 month cycle, I think. And the actual low is in December. But this had a low for January. That's how it happens. But notice
Yeah.
that oil is supposed to be coming down from August. There is a high in August. It did peak earlier. That's oil. You have to like mentally smooth
Mm-hmm.
out the noise because it is
Mm-hmm.
noisy. But interestingly, within this rally on this 8 month cycle, within the rally, we have these pauses. This is technically there are other cycles bleeding into this one, and the forecast or the algorithm is picking them up. These are other cycles. There's sub cycles within the 8 month cycle. Um, but they're useful. They actually work. I've seen them work many times. I learned to pay attention to them. So notice that you have these. Notice that it says H3, L3. These are minor turning points. Anything that's so the ones that are highlighted with the date, those
Mm-hmm.
are category 4. So those are the ones you pay attention to. These minor ones kind of should pay attention to them. Still, this has a high for March 10. March 10 is actually the intraday top. Like it is the top on WTI. It has not been exceeded since.
Wow.
And oil is supposed to not crash, just kind of. I love this model because when it kind of goes sideways, that's what the market does. It kind of goes sideways. If it's crashing, that's what the market will do. It will crash. So it gives you a sense of that. That's how powerful it is. And this is all planetary motion. This is actually using the rotation of the planets. It's a zodiacal model. It's using the rotation of the planets to say, hey, maybe calms down. And I've been expecting that to calm down from March 10. And it sort of did. It was still very volatile, but that was the top. But when does that end? Well, it ended a couple of days ago. And again, it can be off. I just showed you. It can be off by up to these minor turning points, maybe a couple of weeks. But we're coming to the end of this lull in the oil market. And from there, it's just supposed to go up again, not as strongly based on this wave, but
Mm-hmm.
somewhat strongly into a high in July. So that's what I'm expecting, which funny enough, this lines up with my macro models almost exactly because my macro models are showing a top in May, a low in July. And they trade in negative correlation to oil. And oil is saying the opposite. And what are the chances? It's saying a low in May, high in July. So, and the stock market too.
That's
Stock
great.
market too.
I
I'm looking
love
for
this. This is a great addition and layer onto what I'm looking at. This is
hey,
awesome.
you have access to it, so feel free to use. And in fact, the more you use it, the better, because
Yeah.
it's gonna be once it comes out, it's gonna be a good product. But one thing that I noticed is that even this 8 month wave, after peaking in July, and they can invert, by the way. All of this can invert. If oil is falling into July, I'll be worried because the model is inverted, which
Hmm.
means, oh, it rallies into January 27th.
Right.
But if assuming it doesn't invert, and it doesn't look inverted to me, it looks like it's just following this orange line. That's it. That would be it. So maybe we get some, maybe hostilities. I don't know if it's around. I don't know what it is. But whatever it is, if oil begins, if you start to see it rally again, I would not expect it to last very long. It should end sometime in July because if I zoom out to the long-term cycles, they're peaking. So this is the 4 year cycle for oil peaking in April. This has a multi-month margin of error, so July fits. If I look at the 18-month wave, same thing. This one says the top in June 11. Is it June? No, June 9. So the long-term waves are peaking.
Mm.
It's just this one that's showing maybe one final rally, and it should be in July. So this is all within the margin of error of these cycles. And notice again, look, the low is supposed to be in May. Highlights for January. This is so interesting. Look at this. When I looked at this, like, wow, this is interesting. So exact top when it's supposed to make a low according to the planets, but then on this minor turning point, oh, that was the low, right? So there's still this geometry to this whole thing. It's still picking stuff up, and it's the fact that these smaller cycles bleed over into the bigger cycle forecast. That is a feature, not a. I was trying to get rid of these. It's just trying to clean wave, and then I realized no, no, no. These secondary turning points are super useful. So yeah, the long-term model, the multi-month, multi-year cycles on oil that I track, all peaking. They're all showing peaks. It's
Mm.
just when you get into the multi the within a year cycles. So for instance, this one, the 240 day, that one is showing strength still. Like we haven't peaked. And I think that if you look at, I'll stop sharing now. I think if you look at what's happening with this Hormuz thing, is like it's not resolved. Like this is not, and this is what would cause an ongoing energy shock. It's just
Yeah.
not resolved. There are no ships sailing through. So I always go back to the macro, like because that was my world. I was not an astro. Like I did like when I started trading, I discovered that Gann, Gann, WD Gann
Oh
was an
yeah, yeah.
astrologer, and I started studying astrology. Like I studied like taking courses on astrology in 2012. And I was never able to merge these worlds. It was for me, it was macro, interest rates, liquidity. That's what I was using to forecast markets. And then, AI came along and boom, I create these incredible algorithms. And now I'm using planets. But I always go back to my macro. I always put the macro hat back on and I go, okay, is this solved? Is this
Yeah.
situation? And I read a lot on this, and no, it's not. And so based on this astrology, it could be, and I'm curious to hear your thoughts, but it could be that it's not resolved, but it will be soon. That seems to be what the oil forecast is saying. Like we're not out of the woods, but we're close. We're close to something.
Yeah,
Um,
I think that's accurate. I did in my Discord looked at, well, not just in my Discord, but I shared it in my Discord. I looked at some key dates and I layered the Iran and the Israel and the United States charts together into a three-way composite chart.
oh, I need to see that.
It's
It's on the
it's
Discord.
it's in the Discord. Yep.
I'll check it out.
And there's some dates in there that and we're in one of those windows right now of the dates of things that are triggering that three-way composite chart. And so right now, one of the things that's happening on the new moon is that we're within an hour of the new moon, we're also getting a Mars Chiron conjunction. Uh, and
Okay.
that conjunction is hitting the composite natal chart for the three countries. And one thing that I see, you typically, I feel like a lot of times you think, oh, Mars Chiron, that might not be so good. But actually, what I've tended to see is that if, as long as it depends on the person's natal chart and whatnot and other aspects, but I find that it can actually bring a lot of motivation or energy towards the healing of something. So I won't rule that out as a possibility. That is entirely possible. But overall, the rest of the transits, they don't end soon, and they don't look that favorable to me. So other than, that's why I said I'll give room for the possibility of a healing right now. But other than that, there's some longer running transits going on over the composite chart that don't look super favorable. So I think I'm not, macro is probably my lowest skill. I've been working on cultivating it over the last couple of years. But I think if you look at the supply chain shock issue correlated to the Strait of Hormuz, it's, it takes months for that to unwind, or not even to unwind, but to show up and then to unwind. Right. So it's like, I feel like we haven't even really, we're just seeing the tip of the iceberg of that. I don't think it hasn't unveiled itself yet, and it's still happening, right? So then the question is, once it's resolved and once things start moving, then how long does it take for us to resolve that supply chain issue, And I just think back to like the COVID issue or the COVID times, right?
Yeah.
It was like when COVID was happening, supply chain. And then all of a sudden in 2021, 2022, it was like, I had a project going on where we needed electrical switchgear, and it's like, most people don't even know what electrical switchgear is.
I don't know what that is.
Electrical switchgear is something that's required to like expand a transformer size or bring in a larger amount of power. And it's more technical than that. I'm not an electrician, but I'm just saying small infrastructure pieces that are necessary, it took months to get a hold of. And so I expect that we may end up seeing that sort of repercussion as this unfolds, even if it resolves for months later,
Yeah, I think, and I actually, it's interesting. You probably are more familiar with this, but I've been hearing from a lot of astrologers that they were warning that in 2026, some of the astrology looked a lot like the COVID years. And they were thinking, well, maybe, but in my opinion, the mistake was to correlate it directly to disease and the pandemic, when in fact you could have looked at supply chain disruptions, the lockdown of the economy. Since I am a macro head, during those years, my main worry, and I was writing about it until my bosses got angry, it was like, hey, the damage that's being done, like people will starve because of this. And I'm not talking about the disease, I'm talking about the supply chain disruptions. Like if the good of flows is not restored immediately, we're going to pay dearly for this. And interestingly, the other day I had a thought where I thought, oh, actually, it does look like a mini COVID, because we did have an energy shock in late 20, in early 22. We had an energy shock. Now it's not as bad because we had people coming out of lockdown plus the energy shock in 2022. Now we have the energy shock. That's it. We don't have people locked down deciding they want to travel and spend all their savings. We don't have that. But I thought, well, that's a way for this to repeat. It is similar. There are talks of maybe just don't fly as often, or maybe don't drive to work. Maybe let's some ration because there's not as much of the stuff. And so there seems to be a repeat of the theme of scarcity and supply shocks. And the stock market was rallying throughout all of this, but we have monetary stimulus. We don't have that now. We're going to have rate hikes soon. So, and this is not my base case, but this was me dismissing the stock market rally, thinking you guys all think Trump's going to tackle and everything's going to go back to normal because this is all about Trump, and it's not all about Trump. Like what Trump did, he can't undo. You can start a war, you can't choose when to end it. So it's totally different. So for a while, I thought this is just cognitive dissonance. The stock market is having a moment of complete cognitive dissonance. Then I remember that the trader in me reminded me, hey, price is truth. The price is going up, price is going up. And now it's about, semiconductors and, oh, look at all the money that these not making money, they're spending money. Look at all the money they're spending. on all this stuff. And by the way, I love AI. It's awesome. But I'm not gonna run against that narrative. Now I've talked to some people who are also into the macro stuff, and they're like, yeah, it's all in preparation of the Anthropic IPO, SpaceX IPO, and all, and they're buying ahead of that. Okay, sure, that makes sense. Honestly, I'll be honest with you. I'm using the macro framework. I can show you in a minute if you want, before we wrap up, because I know you have to go.
Yeah.
But the macro is saying the same thing. Like May is the top, and the low is June, July. That's what my micro framework is saying. And so I'm just trying to put a narrative behind it. And it just so happens that those dates, because they line up with the oil market, I am thinking this is probably related to oil. Oh, we have a situation with oil right now. So I just try to put the pieces together. And you just reminded me that another feature that I'm building on this app, this web app, is exactly that. So some type of AI agent that will try to connect these dots
Oh,
and
that's
show you,
great.
like a dashboard that says, hey, look, stock market peaking in second half of May, Bitcoin peaking second half of May. These two are normally correlated. Look at oil, negative correlation to oil. Maybe it has to do with oil. Like some that that's gonna be the last thing I add because it's a scattered thought in my mind. But I want to do that, like connect these dots and look for these correlations where around like within a 2 or 3 week window we have turning points on certain assets, and then maybe you can connect the dots because this dashboard would highlight, oh look, the turning points in oil are lining up with Bitcoin. Like,
Yeah.
is there something to that? Well, there was, because they traded in negative correlation since the war broke out. That correlation just totally broke down now. Since the when they announced the truce, correlation broke down. I'm thinking it comes back on,
Yeah.
but I'm
Speaking of
prepared to be
Bitcoin,
wrong.
before we wrap up, do you want to show what you're watching on Bitcoin right now? Just because that I know
Yeah,
that's your
yeah.
actual like specialty and focus. So I'd
Yeah,
love.
but I'm like one of those actors who gets cast into a role, and there's, oh, the guy from Friends. Like, I'm trying to break that mold a little bit because I used to trade gold and stocks before I went into crypto. But it's fair. I trade mostly crypto, so let me show you crypto. And this is what I call my. I'm not going to show you the Astro stuff unless you want me to. Suffice to say, the Astro models that I showed you say the exact same thing. Three things here that I'm watching. I'm actually going to hide this, and if we have time, we can discuss that one because I'm kind of dismissing that one. Um, so it's orange for Bitcoin, orange is Bitcoin.
Mhm,
Black is the 10-year treasury price, which is the inverse of interest rates. So interest rates. So black
mhm,
is interest rates. And blue is central bank liquidity, which is actually the price of the dollar, but it's weighted by the balance sheets of central banks. So it is a dollar. So the way I think about this is pure macro. This is interest rates make the price of the dollar change, and then as the price of the dollar changes, so does the price of Bitcoin. But they follow each other with leads and lags. So in the case of the bond market, it leads Bitcoin, and this is crazy, but anybody interested, I can show you the math. It leads Bitcoin by 13 months, which
mhm.
means other than the planets, I don't know of anything that can forecast that far ahead. So 13 months, it predicts the price of Bitcoin with very good accuracy. Now, the way you check these 13-month forecasts is using the blue line. This is the dollar index or central bank liquidity, but think of it as dollars because that's a dominant component here. They're both saying the same thing. So they both agree Bitcoin is supposed to make a low between February 2nd. This is a weekly chart. Between the week of February 2 and the week of February 9. We actually got that on an intraday basis. The weekly low was on February 23rd. That's fine. That can happen. But then they line up again in May. They both line up. This one lines up in late April. This one says May, early May, um, for the top, and then they both agree again. They're both so look. It, they're both rallying together. They're
Mhm,
both peaking together. They're both bottoming together. So notice
mhm.
that the bond market is a bit more like it crashes and it kind of sideways, but this sideways consolidation thing ends around the same time, June
Mm.
22nd, June 29. And so that's macro, and Bitcoin follows the macro. And on my Discord, I was just showing how a bunch of altcoins uh, just follow this red liquidity line. This is Japanese money supply, and it just follows that. So, and it says the same thing as these other two, a top in May, the top right there on May 10. That's just, this is a weekend, so it's May 8th through May 10.
Wow.
But
Yeah.
that's macro. They're all topping out. And it's funny because when I started looking at it's interesting to see this play out in real time, because I was shocked to see this. When the year starts, you always see the 13 months ahead with the bond market. But this one is 12 weeks. Liquidity is just 12 weeks. So when the year started, I knew to expect a low sometime in Q1 in February based on
Hmm.
the bond market and based on liquidity. But
Hmm.
liquidity, I didn't see any of this. I didn't see past, this. I didn't see
Hmm.
any of this. And then I saw it line up with the bond market in real time. I saw how the blue line started going up, then it peaked, then it went down, then I saw it line up exactly at the bottom once again. Then I'm seeing the same kind of choppy period that you're seeing here. You notice that the black line is like bullish but choppy, and liquidity is doing the same thing. It's bullish but choppy. So I'm seeing that play out before it happens in Bitcoin, and then it happens in Bitcoin. Um, well, allegedly it will happen in Bitcoin. It hasn't happened yet. But yeah, that's what the macro is saying. And you know what my astrological model is saying? I'll show you in a minute. I mean, this is crazy because I want people to know I'm not making this up. So say the same thing. I mean, I can't find the button. There we go. Share. Why can't I share? There we go. And Bitcoin. Now this is a 80-day cycle. So the 80-day cycle is supposed to peak. Oh, look, it's on May 15th. And
Hmm.
when is the low supposed to be? Oh, look, it's July 16. I just showed you how oil had the same dates, and the
Yeah.
stock market had the same dates, and the macro has the same dates. I am very confident of this forecast. That is not financial advice. Actually, I'm not giving financial advice. I'm just confident of this forecast
Yeah.
because it lines up. It shows up everywhere. May and then July. So late June, again, that's well within the orb. So July 15 can easily be June 29. Now, for those of you who want to know crypto specifically, what I hear in the grapevine is they're passing the Clarity Act on July 4. That's the aim. It just
Hmm.
moved through the Senate Banking Committee, I think. And my guess is ahead of that vote on July 4 or July 4th. I think that's a Saturday. So maybe July 3 is the vote. I don't know when that is.
I did a whole bit on stable coins, and the Genius Act passed around the same time. And there are incredible correlations between the Genius Act, the Clarity Act, and the United States Sibley natal chart too. And
Oh, I need to watch that. It's on
oh,
your YouTube, right?
it is, but and that first episode we did some astrology of it, but the next episode we were going to do a deeper dive on the astrology, because the first episode I was also just we were setting up the history and exploring you should watch it. You'll find it fascinating.
I'll watch it. I'll watch it. I've been watching your videos. They're super
Yeah.
interesting because they're like more astro heavy, and like I feel like it helps me a lot with these models to make sense of them. Make sure, because I mean, if it's saying something that completely contradicts what like astrologers are saying, it's like okay, maybe this is wrong, or maybe somehow. So I'm keeping an eye on like what is the narrative? What are astrologers seeing? Especially we're in such crazy times that I feel like it's working. I, I've been following astrology since 2012, and I don't remember a time when it was so accurate and so on point. It feels like we pierced the veil, and now it's like, well, I mean, when the war broke out, 7 days after the conjunction, I was like, you got to be kidding me.
Yeah.
This is. I was not expecting that. I was like, all right, maybe something happens a few months from now, and people look back and go, oh, that conjunction took place. No, no, no. You can't make this up. It's incredible. So I don't know if you notice that. Maybe it's because the potency of what's going on is so severe that it's become literal, whereas before it was more symbolic. I don't know. I don't know if I'm making any sense, but
Yeah,
I'm
or
just
maybe
following
maybe
more.
maybe you've just developed eyes to see.
Maybe. No, no, you're right. Maybe. Yeah. Maybe I'm
um,
paying more attention now.
I think sometimes I agree with you though. Sometimes the correlations are a little less obvious, or you have to look, they're a little wider on the orb we call, or the time band, but it has been things, but I also think time is speeding up. There's a Terrence McKenna talk from quite a long time ago.
I love that guy.
Yeah, me too. Where he talks about time as a spiral, And, I think about that and I think about Uranus and Gemini, and I think about how everything is coming at us so fast. AI is making it so time goes faster. Quite literally this is my own analysis, right? Because
Interesting.
we have the capacity to process more and produce more because of the AI. So it actually makes time go faster in our perception. So that's my take.
That's interesting. No, that is interesting. I mean, this tool I'm showing you, I've been working on it for 2 months, and it looks like something that should have taken at least a year. I haven't shown you the back end. The back end is where the engine run. The engine is incredible. I'm just working now on how it looks. But this engine, when I look at it, I went, what did I just build? What is this monster? This is ridiculous.
What's possible right now is mind blowing, actually.
Yeah,
I remember when I first started getting into financial astrology, and I remember I first discovered Blair, the time trade software, which I use. And I was blown away by that. And I was like, wow, I think back to like the masters who came before us, like Gann and Bear, and even like some of like I've studied with Larry Pesavento, and he talks about how he used to, write. He was doing charts on paper with a pencil. And it's like,
yeah,
so, and you think about how long it would have taken Gann, for example, to build one of his charts that, he was doing sacred mathematics and geometry and astrological tracking and technical analysis all in one. And now we can just do that. And I was amazed a few years ago. And now the things that I can do with my AI, I'm like, I want to see this thing on my chart. I've trained my AI to just spit out trading view scripts for me for whatever I want to see.
that
Like,
is incredible.
it's just like I'll say, give me these dates, give me these times, I want to see them this way, and here it is. And I've been trying to think about building a dashboard as well for myself. So because I would
Hey,
love to, I love the synthesis that you're talking about, where you put it all together, because I forecast so many markets, and I start to see that correlation. If this one's doing this one, then this one's doing this one, and it would make sense that they would all go together. So if there was a landing page where you could see that, you know
yeah, a landing page where some of it, if so, it's like pre-processed a little bit to focus your attention, especially like if you're trading multiple things. I'm just doing it because I like to talk about this stuff. I
Yep.
don't trade most of these things. I'm running now because I own a bunch of Chinese tech companies because I think they're super cheap. And the astrology agrees, by the way. We're not gonna get into that now, but it agrees. A lot of these companies are just cheap, and they're about to make multi-year bottoms. So I started buying them up. And where was I go? Oh, so I'm adding those. It's just it's so much. I'm adding so many things. Just and by the way, for long-term stuff, the planets are awesome because you can clearly see when it's gonna. And if you don't care about is it going to nail the exact date of the bottom? No, but it's within a month or two. And so you know when a stock is cheap. At the very least, you can use this framework for that. Like, what's cheap? Well, if you're going into a 4-year cycle low on BYD stock, that's cheap right now because it's gonna happen sometime this year. That's cheap if you're trying to accumulate. Not financial advice.
Right.
But yeah, no, that dashboard is gonna because I tried. I want to forecast the work. This thing runs in about an hour, maybe. I run it once a year. I could probably do 1,000 stocks and run it over a 10-hour period and just do 1,000 markets. And then a dashboard on top of that
That
that's
would be so,
gonna
yeah.
connect the dots. I mean, that's where this is going. That's what I'm gonna do.
I love it. I love it. Oh, this has been so great. Thank you so much. I like the idea of making this a regular event. This is
Yeah,
excellent.
let's do that. Let's do that. Let's touch base soon.
Yeah, will you tell the viewers
Regularly.
yeah, tell the viewers where they can find you.
So for some reason the YouTube algorithm hates me. So you need to type in Market Cycle Secrets and Juan M. Villaverde. My name also. I think maybe once I break 1,000 subscribers, that's gonna show up again. But it's Market Cycle Secrets, Juan M. Villaverde. Honestly, the most value you're gonna get from my work is join my Discord. The link is there. It's not there's no link because it's not open for everybody. It's gonna fill out at 100 and or so members, and then we're done. We're at about 90 right now. So and then I'm gonna start letting people in. But if you find my YouTube channel, you're gonna find my past classes. We're gonna do one tomorrow. This is probably late by the time you're watching this. But that's where you get the most value. And this tool that I showed you, it's going to be there for the Discord members first. But I'm expecting feedback. So if you want to join my group, it's a private group. It's a small group. We're all interacting with one another, but it's there for people who are self-directed and want to learn and want to send feedback, want to contribute. That's the type of person I'm looking for, at least for now, as this group is very small.
Awesome. Thank you. And to the viewers here, make sure you like and subscribe, because that helps my channel get more visibility. And if you want to connect with me, you can connect through my website, margoamala.com. You can join my Discord or my Patreon, and I will put links to all of Juan's work and to my work in the video description below. All right, everybody, until next time, bye.